Hello, Introduction to Business. I'm going to test out maybe giving you notes this way instead of doing it together at the same time, which means synchronous, so that you could look at the notes at any time and do asynchronous. I find it really odd to give notes, online and talking to you, and I don't really get much feedback from you, so we'll give this a try. This is to start out today for your Chapter 12 Income and Budget Notes. So you should open up this document from the Google Classroom. You'll open that up and you'll have these notes here. And then while I'm doing that, I can actually split the screen here. I would suggest you maybe do the same thing. Get that to work maybe. I was trying to split the screen. If you can get the screen to split, I can usually do this on my desktop easier. Chromebook's a little small of a window to do it with, but I can shrink it down. And then I'm going to go back to the classroom and open up the PowerPoint. So I have slides here for each chapter. This is chapter 12 slides. We're going to open that up, and that's what I'm going to talk about. So as I go through the chapter 12 slides, you should be filling out the notes over here. For this one, it's just definitions really to start. I'm going to get rid of that. Get rid of Google breakout rooms. All right, so this chapter is 12. It's about financial management. It's really about your personal financial management, not about the industry of finance. So we're going to talk about records, keeping, financial statements, payroll, decision making. We're really going to start out with paychecks and payrolls today. So payroll is usually companies pay everybody about on every 2 weeks anymore. It's either every 2 weeks or it's twice a month. If it's every 2 weeks, then the dates actually rotate. So more and more firms have went to twice a month, and often they pay on the 1st of the month and the 15th of the month. So when you get your paycheck, right, the company had to run all the payroll for everybody that was involved. In a payroll system itself, the common components are here. It's the financial records and keeping up all employees, compensations, deductions, and net pay. Right? So compensation is your pay, and there's multiple types of pay, which we'll talk about in a minute. Deductions is what comes out of your paycheck when you get the check. You have gross pay, which is your total. Then you subtract out deductions, or things the employer takes out and does things for your benefit usually, right? They take money out of your paycheck. And then you end up with what is your net pay. And the net pay is the money that you actually get to put into your bank account and spend, right? Most of the time anymore, even like my kids worked at Walmart and Menards this summer, and they set up direct deposit immediately. So direct deposit is usually you give them a checking account that you have, and instead of them giving you a paycheck, they will automatically send the money into your checking account, and you don't even necessarily get any paper at all anymore. Instead of getting a paper check like people used to, most of the time they'll just get it into either a human resource financial system that you have access to, or they'll send you an email with your showing what you were paid and what was taken out of it, what your gross pay was minus your deductions and your net pay. So the income is the actual income is all the money you earn or receive during a given time period. And it says here that could be salary and investments. So salary is if you get paid not by the hour, but like as a teacher, I get paid so much a year. Let's say I get paid $100,000 a year. It doesn't matter if I work that day or don't work a day, right? I'm going to get paid $100,000. So that money for me, like we don't work in the summer, but I can have it spread out over the summer and pay me over that. But my salary means it does not change based on the number of hours I work. And believe me, a lot of people that work for salary work way more than 40 hours a week. Professionals often can work 50, 60 hours a week, and they get paid the same no matter what. Their job is to get the job done no matter how many hours it takes. An hourly employee would be more like somebody who works usually in retail. They get paid by the hour. Say my daughter was getting paid $13 an hour at Menards. Some weeks she worked 24 hours, so she got 24 times 13 for her gross pay, and some weeks she worked 35 hours, so she get 35 times 13 for her gross pay. Often hourly employees, can be paid overtime, where salary employees don't get overtime at all. They might get a bonus at the end of the year in some companies, and often they don't get a bonus at all based on how the company is doing. Here, more detail about payroll. Well, we're going to describe the components. I've already been doing that. Identify key information about the payroll. We've talked about these three terms. So now you have payroll, direct deposit, and income here. Those terms you need to put over here. And I would try to write this out in your own words. What is payroll? In your own words, what is direct deposit? And in your own words, what is income? I've already talked about salary employee and an hourly employee. And you should put those out too. And here's the definitions of those. Set of money, doesn't matter how many hours you work for salary. And again, hourly is you get so much per hour. Often for an hourly employee, if you work overtime more than 40 hours a week, the U.S. government enforces that you can get overtime pay. In most jobs, you would get overtime pay. That's often time and a half. So like if you're working in a retail job, they're going to try really hard not to have you work over 40 hours a week because they don't want to pay you overtime. It's too expensive. Next slide. So gross pay is your total pay, the total amount you earn for that time period. If it's 2 weeks, then the total amount you earn for 2 weeks. Deductions is what's taken out, and net pay is what you're left with. So deductions, you can put down here money that's taken out, okay? Often the money that is taken out is withholdings. Withholdings is one type of deduction. That's taxes. So there's like Social Security tax. It'll call it FICA. They call it FICA tax. Social Security tax, you'll see after they have your gross pay, they'll take 6.5% out of your pay for FICA tax, federal income, Social Security tax. By the way, your employer is paying an additional 6.5%. So the U.S. government gets 13% of your pay for every hour you work just for Social Security tax. Another often withholding is an income tax. The state of Illinois takes 5% out for income tax. Some states don't have an income tax. There's also federal income tax. Federal income tax is, let's go down here. Oh, it's a link to the rates here. So you might want to link to the rates. The funny thing about federal income tax is they are graduated income tax. That means the more you make, the more that the government will take out as a percent from your paycheck. And if you ever want to look up the schedules, you can click on that link and get it here. And it kind of explains the rates and tax brackets for the year of 2019. Okay, a tax rate is a percentage. Okay, rate always means percentage in business or anything. It usually means percentage. Based on how much money you make is the percentage they will take out for that additional dollars. Let's see if we can. I'll probably pop this up on later when we actually do income taxes. But you see right here, if you make $0 to $9,700, right, your tax rate, it says, is 10%. And then it says from 97 to 39,000 is 12%. But they only tax the 12% on this additional amount. You pay 10% on this amount, then you pay 12% on this additional amount, then you pay 22% on this additional amount. I want to let you know that in the election this year in November, there's a special thing on the ballot, and they're calling it a fair tax rate. And what it's saying is that for the Illinois income tax, if you vote yes and it passes, they're going to turn the Illinois income tax into a graduated income tax, just like the federal income tax here is. Right now, everybody in Illinois, if you make $1, you pay 5 cents to income tax for the state of Illinois. If you make $100,000, you pay $5,000. If you make $5,000, you pay $2,500. So no matter what, you're paying 5%. A graduated tax means you pay more as you make more. I don't particularly like this law because it's going to allow the Illinois Congress to set any tax rates they want. They're going to use this law to be able to tax and increase our taxes dramatically. And I'm not for increasing taxes, but some people feel like people that make more should pay more. Okay. And this is something that you really have to look into and understand completely before you decide what's right or what's wrong. Um, as a U.S. citizen, when I pay federal income tax, if I make more money, I pay more taxes. If I make as a percent of the additional dollars, that's what Illinois wants to do too. And I don't necessarily have a problem with that idea. What I have a problem with is that the Illinois is they're basically using the law to take all future laws away from them having to be passed to change the tax system. And that I think is problematic when you give a legislature the easy possibility to change something in the future. All right. So that was I was showing you there the graduated taxes and how they work. This talks about the FICA. I already talked about it, Social Security and Medicare, FICA. Social Security, you pay taxes now, but when you're older and you don't have a job, you get money paid back to you, right? So it says here you're paying 6.2% from you that you'll see as a deduction and 6.2% from your employer. When you turn 62, you can choose to start getting Social Security if you've paid into it. If you wait until you're older, you get actually more money each month. So if you take your Social Security at the age of 62, it's decreased. So when you get older, there's a lot of questions about when should I take Social Security? When's the best time for me to take it? Should I wait till I'm older? Should I wait till I'm 65? Should I wait till I'm 67? Should I wait till I'm 69? At 69, you get full benefits, so there'd be no reason to wait till after 69. A lot of that is a gamble. You're gambling how long you should live and how much money you would make. And so, but you should do those calculations when you become of age to do that, or some of your parents may be wanting to do those calculations soon if they haven't already. Medicare is a health care that you get. And when you turn 65, everybody is eligible in the U.S. for Medicare. It decreases your medical expenses. You still may want to have supplemental insurance, but this is basically health insurance for older people. And we're paying into that. Right now, it's 1.45% from you and 1.45% from your employer. So if we just add Social Security taxes, you're at 7.65%. And then if you add the 5% Illinois taxes, you're at 11.65%. And then if you add, let's say you're in the 28% tax bracket, you're at like 40% taxes just being in the 28% tax bracket, which means you make like maybe $60,000, $70,000 a year, which is not $60,000 to $70,000 is not enough to raise a family in this area in the U.S. and have a lot of extra money to spend at all. So you can see that we are paying a lot into taxes, but we're also getting the benefit from those taxes. Besides Social Security, Medicare, the income tax goes to pay for all the different services that we get from our government, such as roads and sewers and water and clean water and all types of millions of other things. I think I'm going to stop there. Well, there's one more payroll system slide. Employers pay federal unemployment tax. That you don't have to pay that, but the employer pays it for you, because if you get fired from the job or get laid off and you've worked there for so many months, at least 6 months, I think it is, then you can claim unemployment insurance, which is a temporary benefit you can get while you're looking for another job. And then it talks about minimum wage here. Minimum wage means there is a rule in the U.S. and in Illinois of what the lowest amount an employer can pay you for an hour. This is way out of date now. I think in Illinois it's $10 and maybe $10.25 for minimum wage. In Chicago, it's a little higher. They have to pay their people a little higher to live in Chicago. So this is a law by the U.S. And then the U.S. sets a law minimum, but each state or even a city can pass laws that make it that increase that minimum wage. Right. So cities and states can often pass laws that increase control over people and businesses, but they can't decrease control, saying they can't pass a law saying, well, in Illinois, we're only going to pay you $5 an hour for minimum wage. They have to at least abide by the federal law. I'm going to stop there. Hopefully you can fill out your notes. And I would think your notes, if we look at here, I've got through deductions, net pay, withholding, income tax, Social Security, Medicaid, up to minimum wage. And that's a good stopping point. So this video should take you up to minimum wage, fill those all out, and I'll give you time in class to work on this, but I'm just going to give you the video. And I can't stop the video.